every click to every tick.
There's no fear of missing out on next-gen investing. 1 p.m. Eastern, only on the Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for the big three. 3 stocks, 3 charts, 3 trades, and Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist, BullseyeOption.com. Great to see you both. Alan, I know your first company here is in the energy space. What do you think is going on here as markets have been selling off and oil came down significantly?
Well, the summer was a lot of fun. We had summer fun for the optimists and the bullish folks, but we're seeing a little bit of a fallback. Let's remember how far we've come. We, off those lows last October, we're getting very, very, very close to the anniversary of that bottom in the S&P. Now, crude oil was the last of the major asset classes to play ball and to rally back, and it may have gotten a little overdone. It had been in that range for the longest time, and that 90 was the top of that range, roughly between 70 and 90. So, it popped above it a little bit, but couldn't force through just yet. We're seeing some profit taking and some pullback, but we're at some critical levels, and as Ben will say, it's how we test and or reject critical levels that tell us a lot.
And we've seen this one coming off from 65, almost 66 to $62.50 today. So a name like Shell here that we're watching, what jumps out at you, Alan?
Well, what jumps out at me is the energy sector, obviously, has a lot of positives. And we could talk about the dollar index. And I loved your last guest talking about how the rate reset. People really lose perspective. I know we always joke here that Ben and I are old grizzled traders, but these rates are not even at the median of the last 50 years. So, if you didn't take advantage of the free money, you didn't take advantage of the free money. If you didn't buy, Apple when it was at $9, you didn't buy Apple at $9. There's nothing you can do about it. It is what it is, but, we're still, at a level that has been the average of the last 50 years, and the markets have done fine. So, we can get forward with that. But when you want to get into Shell's been between 55 and 65 for the last year. 60 is a midpoint. Let's see how that level holds. It's got a PE of 6. The market in general is 11% off the overall high. So I'm looking at this as a trending stock with a pullback. Want to buy the April 55 call. Again, that's the 1-year low, essentially. That option's trade for about 9. It's $7.50 in the money. So it's a deep in the money option that's going to act like the stock. And you want to use the good old buy low and then sell higher.
We all know that one. Ben, your thoughts?
Well, what I'm seeing right now is weakness in terms of price activity. You can see the chart behind me, a well-defined trend lower. This is on the intraday time frame, though, and I'll show you what's going on in the bigger picture. But first and foremost, let me direct your attention to, again, top left corner to bottom right. You've got a very well-defined downward trend here, and I did go ahead and identify some of the areas of consolidation that have formed. But taking a look here, you can see from 66 recently down to this 61.20 level. Alan was talking about how the market reacts at key levels, and right now we are starting to see a little bit of a bounce off that lower extreme here, but still holding below a key area right now that was established on the way down. Let me show you what I'm talking about in terms of these areas of value that form at lower and lower levels in this instance, because we're trending to the downside. So we have 65.80 to take note of, 64.60, 63.40 is the area I'm looking at right now. Why? Because we're currently bouncing around 61.80. So the idea idea here is that continuation more likely than change, but if we're looking for some upside momentum, that's going to be the first area that comes into play. The bulls got to get above 63.40 before you see any real indication of a change in terms of that momentum, which we have been seeing to the downside. Now, that's a 5-minute candle chart, right, or a 15-minute candle chart. Here you can see that this is a longer-term trend up, so we could be in a situation where we're pulling back and providing another buy opportunity in that longer-term trend up. So again, the bulls are kind of patiently waiting right now, waiting for a trade to get back up above 63.40, looking for another breakout to the upside and continuation of the pattern we've been seeing with value forming at higher and higher levels. Now, this chart here, one thing I did notice, again, just kind of getting back to this longer-term daily chart is, again, longer-term trend of the upside, but mostly just kind of a grind, right? You don't have that real well-defined staircase type pattern that I look for. Just recently dipping down below the 50-day moving average, but holding above the 200. RSI is kind of limited in providing a lean one way or the other. I think the real structure here in this instance, Nicole, comes in that daily time frame, that trend up that we're seeing, but still in a short-term trend down.
Right, understood. Okay, so you have this short-term trend down. Final thoughts on this one, Alan Nuckman.
Again, like every week, it's about risk reward. I'm leaning on the 60 level. I've got 6 months of time. I've got an in-the-money option. The range breakout target 75. We get to 75. That's still below, off the highs that we've seen over the last decade or so. We're seeing oil come back, and it's about the dollar for me as well. But we'll talk about that with their next two plays because these are all dollar related.
All right, well, you have nat gas at 7.31 here. The dollar has been at recent highs, though is coming off a little today. Your thoughts on UNG?
Well, again, a commodity play. It all comes back to commodities for me. What we're seeing here is if we look at the stock market, it's come back to its 4,200 breakout if you look at the S&P. The VIX, even though the S&P has made new swing lows, did not make new swing highs, and we've remained below the 20 level now for more than 5 months. That's very much a positive sign. If I look at UNG, now this is the ETF that tracks natural gas. Natural gas has been absolutely positively stuck. Now obviously we've had a lot of weather variations, but the summer heat didn't really move this much. What I'm simply saying here is, over time, this is an undervalued asset. How to play that? That's maybe my intuition, but I also see bullish divergence here, meaning it made new lows, but not new highs, implied volatility. That's how you see a sentiment shift. So the way to play here is I'm buying a January 2025, 470 days. I'm buying a $5 call. The low in this is $5.97. That option costs, what do we say here? The break even on it's about 75 cents above where we are right now. That option's, we're looking at that $5 call, which is again below that level. So, we've got a lot of potential upside if you look at UNG, and you've got a lot of time. Those are two things I like. Now this, I'll tell Ben, and Ben's going to give me but, no way. It's not done anything yet, but it's starting to set up for a potential breakout.
Right, understood. So potentially a breakout. Does the chart tell you that, Ben?
Not as of yet, Nicole. We're still in this consolidation area. We're still in a downtrend. You've got multiple time frames that are suggesting that as well. Let's just start off with what I saw when I opened up this candle chart. First and foremost, we're looking at hourly candles, and we're going back to the move lower that we saw in the beginning of August. High conviction to the downside, and then you sort of lose that trajectory lower and go a little bit more sideways and rotational, right? Just taking a look again as you step back, you'll see the, again, conviction on the left side of the screen, right? The big move lower, and then you can see the balance that's been forming around 680. Now, as you look at the left side of the screen, you can also see this pattern develops multiple times on the way down, right? These areas of consolidation that form, even in this bigger picture, kind of down momentum, sideways consolidation. Now, this is an hourly candle chart. Let me show you what's going on here as we take a step back and look at a 4-hour candle chart. You're going to see the exact same thing. High conviction to the downside. This was in the beginning of the year into February. Sideways consolidation that's been playing out. Again, this is the big area. 680 right now is what we're looking at. And then again on this 4-hour candle chart, you're going to see a similar pattern playing out here in terms of these situations or these patterns, these conviction to the downside, the vertical, horizontal, the wash, rinse, repeat aspect associated with price playing out again multiple times here. So it's just one thing that I tend to notice as I look at the price activity. And then I did want to show you what's going going on here lastly in terms of that bigger picture, right? Even the same thing. This goes all the way out to, we're talking August of last year, Nicole. So we're talking on the more intermediate, the bigger picture time frames. We're seeing trend lower here play out. 680 is the balance area that we're on right now. As long as we're below $9, still in a downtrend in shares of UNG.
Okay, so still in the downtrend, not really seeing the same thing you're seeing, Alan.
Not yet. We're not seeing it yet, but a 6 to 8 range. A breakout of that target's 10. It's a chip down. The low is 5, is like 5.97. We're looking at a $5 call, trading for about 3 right now. It's, $2.25 in the money. It's just math, and it's 470 days. So set up a lunch for Ben and I for 470 days from now, and I think he'll be buying.
So not yet. We'll just have to wait and see. Last but not least, you're looking at silver, SLV today at 1909. Your thoughts on trading silver today?